about whether it's a good time for buyers to buy or not. And I know everyone's probably thinking, well, of course, Dawn's going to say it's a good time to buy because she just wants to sell houses. Number one, I'm always going to try to use data and information to help explain why I am giving the advice I'm giving. And full disclaimer, I'm not an economist. I'm not a mortgage lender. I'm just a little realtor in Southwest Michigan. And so I'm just going to go over some data with you today and share some information and facts and hopefully help you make the decision of whether you feel it's a good time to buy or not. And just giving some information about what's happening in the economy and what's happening in the housing market. So number one, let's start with, are we in a recession as far as the economy goes in the US? So what I've got here on my screen, I just want to show you, this is from Forbes, Forbes.com, under their advisor and investing section. So you can scroll all the way through all of this. There's a lot of really good information for those of you that are my data nerds and really like to pluck through all the information. But what I really want to scroll down to, just for sake of saving us time, is basically where it says, it talks about some of the data points that they use for, are we in a recession? And basically, overall, what are we looking at? So you're going to see here, right in the middle of the screen, 15 data points, this, that, the other. And it says the 15 data points for recession tracker had the following grades. Good. We only had 3 that were in the good range. We had 4 that were neutral. We had 8 that were bad. What this article overall says is we are not currently in a recession, but it goes on to state that, the economy could be slowing. These data points show we could be heading into, or drifting, I think is one of the words they like to say, drifting into a recession. But it also says to keep in mind that not all of these data points carry the same weight and measure. But then it does just say things aren't looking good. So what does that mean for the housing market? What does that mean for buyers and sellers, especially buyers? We know that interest rates have been all over the place over the last year. October of 2022, we really noticed that October, November, December, even of 2022, when the rates really hit some high numbers, close to 7s, a little over 7, 7.5. So what we saw is buyers kind of panicked, slowed off, and said, let's see what's going to happen, because there was also a lot of talk of, the housing market's going to crash because they're raising these interest rates so high and we're heading into a recession. All these other things were being rumored, to be getting ready to take place. What we saw in the beginning of 2023, and what we're absolutely seeing now in March, beginning of April into middle of April, is, well, number one, interest rates are slowly coming back down, and buyers are just starting to realize that the market isn't going to crash. I mean, you can understand as a buyer, even if you're not worried about the interest rate, you're worried about buying a house that now all of a sudden is going to lose 10, 15, 20% in value, which is somewhat what happened in 2008. So that's still fresh enough that people remember that, and it scares them. So, everybody's going, oh my gosh. So everybody kind of panicked, held off just to see what was going to happen. And we're now seeing some of those buyers that were cooling off a little bit, entering back into the market. And we're definitely seeing, in our local area here anyway, things priced below that 375, 350 price point, if it's priced correctly for the condition, location, all of those things. They're still selling with multiple offers, 2 and 3 offers, maybe not 10 or 15, but still seeing multiple offers and still a strong seller's market. So then buyers are like, great, so it's definitely not a good time to buy. We're going to talk about what all this means. But I really want to focus on the economy, the recession, and the mortgage rates, and how does that factor in, and why is that important to you as a buyer, and what should you do with that information? So we are not technically in a recession, but things are looking bad. We're drifting possibly, so let's talk about what that means. The next thing I'm going to share here is from Fred. What is Fred? That's basically the Federal Reserve Research and Development Department. The St. Louis Fed is who hangs on to that information and keeps that information. So you're going to see St. Louis Fed. That doesn't mean this information is only out of St. Louis. This is for the US, this information that we're pulling. And what I thought was really cool is this was able to show the median sales price of homes sold in the United States going all the way back to 1965, I think is our lowest or earliest parameter there. And what I want to show you, these gray areas that go vertically, you're going to see 1970, 1975, 1980, 1982, 1990, 2001, 2008. That one we know was a scary time. And then right here, this COVID recession where we know all this stimulus was put into play. So what does this mean? We have 1, 2, 3, 4, 5, 6, 7, 8 recessions that we have on record here from 1965 to 2020. But what I want you to notice, the blue line here, what that is it's showing the median sales price of houses sold for the United States. Now, in those gray areas where you see those recessions, what do you notice to what's happened to median sales price of homes? Slight dips, correct? So honestly, I mean, here in 1970, there really wasn't a huge dip. 1974 through 1975, the housing market actually continued to increase. 1980, at the beginning of that recession, and then going through towards the end of that recession, you see housing prices slightly maintain or increase. In 1981, quarter three of 1981 through quarter four of 1982, what do we see? That from the beginning to the end of that recession, prices went from 69,200 to 71,600, continued to increase. You look at the recession here in 1990, you will see a slight dip from quarter two 1990 to when the actual recession started. So it went from 126.8 down to 17,000. And then if you go to the end of that actual recession, 120, and continues to then keep, and you're going to have these slight little ups and downs. I mean, that's just normal, ebb and flow, correct? But as far as, seeing drastic changes in prices, oh, yep, here's 2001. We went from 179 down to 171.1 at the worst of it. And then, whoop, goes right back up, down a little bit, continues to keep drastically increasing from 2001 all the way through quarter one, 2007. We start to see what's happening here. This is where the crash is getting the major crash, where everybody saw major dips in, home prices. We saw a lot of foreclosures, that kind of thing, and that's what contributed, amongst many other things, in the crash, the housing crash. And so you'll see quarter one, 2008, prices were at 233.9, went as far down as 2084. So worse of that recession and housing crash, we saw I think I figured that to be a 17% dip in prices. And that is the worst of what we've seen in any housing crash out of 8 recessions. So keep that in mind. And mind you, there's 8 recessions, and really we saw one really drastic drop in prices, in home prices, median home sales during that time. So then it even starts to go up a little bit in quarter two of 2009 in that recession, comes down, and then starts to again just on that upward trajectory. 2020, COVID hits. They start throwing all kinds of stimulus things. Mortgage rates drop drastically. You combine that with the fact that we have more buyers ever on the planet than we had before, and you can see housing has just continued to skyrocket. So what does that mean for where we're at now, and what's going to happen with home prices moving forward? Are we going to see a drop if we enter into a true recession? What's going to happen with mortgage rates? So I'm glad you asked. I actually spent an hour today attending a really awesome class. Some top advisors. The top advisor for this class was under Obama administration. He was the head of the FHA administration, the Federal Housing Administration. This is a guy who knows his stuff. He was brought in when the crash started to happen because there was a housing crisis going on. So he's lived through that. He knows what to look for. He also then worked in mortgage for a very long time, so he understands what all of that means. And so I'm just going to give you some of the key takeaways from that and what this means for buyers moving forward. So let's kind of plug into some of that data here. So over the next 5 to 6 months, what they're anticipating is that we might see a slight hike again in mortgage rates, but then that's pretty much they're capping and maxing out. The Fed, anyway, is capping and maxing out on what they want to raise interest rates at. And so the theory is then after that, what we're going to see is maybe third quarter of 2023, heading into 2024, is interest rates could potentially be in the 5s, and then also maybe even as good as mid 4s. So let's think about that. If interest rates start to go back down, we're already seeing buyers start to enter back into the market because they realize the market isn't crashing. Regardless of what the rates are doing, they have to buy. And then if we see the rates start to come down, say to 4.5%, that's still really good. Honestly, 6% is good. And we can talk about that too at a later time. Looking historically, 6 is considered a very great interest rate. But anyway, so what's happening is you're going to have interest rates start to drop back down. And The buyers who said, forget it, I'm not even purchasing until the interest rates drop back down, are coming back into the market. And then you have this millennial generation. Basically, median age to purchase is about 34. And from that, like 25 to 34 age range, they're all entering the market soon and obviously within the next 5 to 10 years. So what's going to happen even long term over the next 5 to 10 years is you're going to continue to see demand be extremely high and inventory being extremely low. We have not seen a population enter the buyer market ever historically as large as what it's going to be, starting definitely within the next few years. So you start coupling all of those things in, and it's very easy to say, according to all these specialists and economists and housing gurus, that we are heading into another of 2020 and 2021 where things were just absolutely bonkers. We kind of had this false sense that things were cooling down. I mean, they did cool down, but it was a false sense because we had this pent up buyer activity that they kind of what happened with COVID when they couldn't buy anything during COVID because we were shut down for 8 weeks. And then all of a sudden, all these buyers, when we were able to show them houses and this and that and the other, it went crazy. And I think we're going to see something similar happen according to all the data they're giving us, that, you've just kind of got the perfect storm to keep driving up prices, keep driving up demand. So basically, coupling all of that in, is it a good time to buy? Yes, because further down the road, home prices are just going to continue to increase. There's not any indication that they're going to drastically reduce in price. Let's say they reduce mortgage rates, you're going to have this influx of buyers coming back into the market. So you're going to have to be competing against even more buyers, driving prices up. So even though your interest rate might be lower, you're not really going to be helping yourself in the long run because you're paying astronomically more for the price of the house. So that's why you've probably heard the saying, date the rate and marry the house. So purchase the house you want now. There's actually, because in some areas we've seen buyers back off, this is the best time to buy. The people who were apprehensive and scared, people like those people backing off means it's less competition for you. There's still competition, but there's less competition. So this is actually the best time to buy, even though rates might be a little bit higher than what everybody was, enjoying in 2020 and 2021, in beginning of 2022. So what can happen though is you purchase your house now that you find and love. If interest rates do go back down, great, refinance once those interest rates go back down. What if you're saying, well, what if interest rates don't ever go back down? Right. What if they don't ever go back down? So not only then are you waiting for an interest rate to go back down that doesn't, you're also now going to be paying more on top of that because the housing market, the demand is just still going to be astronomical. So yes, it's a good time to buy. It's actually the best time to buy, relative to what the last 2.5 years have been, despite what interest rates are doing. Buy the house now, refinance it a year from now, and you're going to put yourself in a really good position. Better than some of these people that are holding out, waiting for interest rates to lower. Meanwhile, the prices are going to start driving back up drastically. We only saw I think just under a 2% increase in home values, from 2022 to where we're currently at now. Before, when it was crazy, 2021, 2020, we were seeing 15, 20. There were some areas in New Buffalo and other areas like that, we were even seeing a 50% increase in home sale prices. So if we get back to that, you're really going to be kicking yourself if you didn't decide to purchase now, even though rates were higher, versus waiting for those prices to just keep skyrocketing because you're holding out for this magical number and an interest rate that may not get back down to the 2.5%, 3%. Yeah, it might go down to 4.5%, like they're calling for next year, but by next year, prices could be up 10, 15%. So which risk are you willing to take? That's up for you to decide. But, I think myself, looking at all this data, if I was currently in the market, I'd be buying now rather than waiting.